Josh, thank you very, very much. The webinar should have begun now. Right, now let me explain what's going on here. What I was saying is that this audio squawk from President Biden is threatening to potentially release the strategic reserves of oil from the US. That will push oil prices lower because there'll be more supply in the market. So what we need to look for is potentially some oil weakness coming into the market from here. Now, the expectations are that the US will potentially use their strategic reserves, particularly if inflation is high this week. So a potential trade idea is the oil market can be sold at market with stops above the highs, looking for a move back down to that 79.50 region. So any retracements high can be considered suitable for shorting. So look out for that, and look out for the narrative changing. So as long as the US might be using some of its strategic reserves, we'd expect some more downside in oil. There's an argument going on between the US and OPEC in that US wanted OPEC to bring more oil into markets, and this recent surge higher we've been seeing in oil markets, right back from the whole year, the US is worried that that's increasing inflation too much. So they're saying they're going to release some of their strategic reserves. So just keep an eye on markets. This is quite an interesting area. So, a potential area to short would be at market with stocks running above that 82.70 region. Now, it's not like a definite no-brainer trade. Price could easily move above that, but it's quite a low risk, high reward area with a potential move down to 79.50. And then if that breaks, then prices can move lower. So I just want to flag that to our attention straight away, because that was happening as news was breaking, as the webinar was starting. Okay, with that being said, let's just go and have a quick look at the overall week ahead. Now, there's a number of issues to talk about this week. The first thing we want to talk about this week is the FOMC speakers. We have Bowman, Evans, Clarida, Powell, all speaking from this point on. Now, let me tell you what's going on with, let's look at yields. That will help clear us. That will help us first of all. Now, US yields, the 10-year and the 2-year, are both moving lower because last week the Reserve Bank of Australia, the Bank of England, the Federal Reserve all pushed back against interest rates rising more quickly. The Fed are patient, RBA is patient, the Bank of England are not as hawkish as the market expected. So yields are moving lower. Now this is pressuring the dollar lower. It's also significantly for gold moving real yields lower. Now if you just take a look at real yields, this is the nominal bond yield minus inflation expectations. What you can see is that real yields have taken a sharp move lower. You see here, that's that orange line, yields are, and gold has moved sharply higher. So gold is being supported on this narrative that real yields are dropping, that the Fed is going to be patient, but inflation is still high. All of that is a perfect scenario for more gold upside. So gold broke out this daily trend line. Now, what do we expect going forward? Well, going forward, we expect potentially more upside in gold as long as real yields are falling, the dollar is falling, but inflation is remaining to the upside. So looking at the Fed speakers this afternoon, what we want to see is a hawkish Fed member saying something dovish. So if we just take a look at who we've got coming up, we've got Clarida, we've got Evans, we've got Powell. So Powell's more neutral. So anything he says that's more dovish is going to be supportive for gold. Evans is a dove. So we'd expect him to say something dovish. Clarida is a neutral. So Clarida is the more interesting one. If we have Clarida speaking, and Clarida speaking a more dovish perspective, that is what's really going to potentially boost gold. So that tells us, looking later, Clarida says something dovish, that's the upside for gold. Technically, target 1, 1830, target 2, 1900. Get above 1900 and the way's open for all-time highs at 2054. Looking at this technically, weekly chart, we have a Harami inside bar, false break, and a bullish engulfing bar. This is signaling higher prices. Stops can be managed below the low of the previous weekly candle. So from a swing trade perspective, it's possible to enter at market, stops below 1750, and looking for a move through 1830 and basically up to 1900. The seasonals are pretty strong for gold as well at the moment. If you just take a look at the gold seasonals, you'll see that, let me show you, where are they? Where are they gone? Where are they gone? Where are they gone? I'll just show you the seasonals for gold. Right. You can see, like, over the last sort of 10 years, if you just detrend this, you can see that okay, gold prices from like the end of December through to like the end of Feb, say, right? Or just take it from, it's better to take it from like the end of December, like the 23rd, something like that. Right. Right, you see that? Like in the last kind of 10 years, you see how strong that trend is to the upside. Now, you can also do this from like November through to December. So if you start in like November and you go through to Feb, you'll see that the upside in gold is still pretty strong. But November tends to be weaker. And if you just look at the November seasonals, you'll see that November seasonals are not so strong. Now, the reason for the upside from December is it's the Chinese Lunar New Year in Jan, and you see physical demand for gold around that time of the year. So, yes, upside in gold does make sense seasonally, technically, fundamentally. Risks can be defined underneath that recent high. If Clarida is very dovish, then expect 1830. So some short-term profit taking will take place at 1830, but if 1830 breaks higher, then you can look for a retest to potentially go long. So gold has some really nice fundamentals and technicals all coming up together for it. So definitely, you know, keep your eye very carefully on gold. It's a great opportunity that I can see. I am long gold. I was long gold before the non-farm payroll because I just see that the situation is looking good for gold. Now it's a risk. So I've defined my risk sub 1750. So that's where I'm risking it. But if you look on the monthly chart, you'll see that price is breaking out of a Harami inside bar. You see that false break of an inside bar pattern here on the monthly. All of this is just signaling a retest up to 1900. So stops sub 1740. Looking for a retest 1900. It's a pretty you know, high reward, and probabilities are in balance of favor of gold moving to the upside, with yields moving lower but inflation moving higher. So I hope you can see that. It's definitely a very key market to be keeping your focus on, and that opportunity is present. But if you got Clarida saying something really, really kind of, you know, if you got Clarida saying something very, very dovish, then it wouldn't be surprising to see a bit of a, you know, it wouldn't be surprising to see a bit of upside in the in gold market. So that's definitely something to be looking for and keeping your eye on as we come into this afternoon session. So do make sure you keep your eyes open for that, keep looking at it, and look for a potential move. It could be well worth looking at moving forward. Okay, so we'll go on to Tuesday. Now, on Tuesday, we have the German's view economic sentiment. Now, one interesting currency pair to look at for Tuesday is the Euro New Zealand dollar currency pair. Now, looking at the Euro New Zealand dollar currency pair, what we can see is that the pair's broken out that key support. The RBNZ is expected to hike interest rates like up to 3%, according to Westpac, by 2023, 4 times next year. So the outlook is for more selling in the Euro New Zealand dollar pair. If the economic sentiment is very weak tomorrow, and there is concerns about rising COVID-19 cases now, particularly in Germany, expect Euro New Zealand dollar downside. So you can expect sellers at market, stops just above that 1.6500 region, looking for a move potentially lower. So watch out for that come the economic sentiment data that comes out tomorrow. It's definitely one to be keeping your eyes on. Anything very negative for the Eurozone, you'd expect to find more Euro New Zealand dollar selling. We also have some PPI pressure that's mounting for the US. That's producer price index, and that just tells you how much producers are paying to produce their goods. This rises when inflation pressures are growing. So again, if this moves a lot higher, we would expect to see potentially more upside in gold. Anything on inflationary is important for gold. Powell speaking again, Governor Bailey speaking again, watch out for pound risk for those. Macklen's also speaking, watch out for risk with the Canadian dollar. The Bank of Canada have made a more hawkish twist. Remember, if ever you want any help just realizing what central banks are doing, go along to my blog. You'll see here that I've got a central bank watch tab on my blog, and in this central bank watch, you can just look at what the latest central bank meeting has done. Let's just see that. So that was what the let me just find that. Okay, I don't think I've got that updated yet on my blog. Normally come here and I do cover the central bank meetings, and if you miss the individual ones, I always do cover them on the overview look. So I will do let's just see where I've got it. I do central bank overviews. So where's the latest? Yeah, so there's a September one. I haven't updated the latest Bank of Canada meeting, but what I'll tell you is the Bank of Canada have made a more hawkish twist. They have, brought forward interest rate high expectations. So anything positive from Governor Macklen is just going to help that Canadian dollar upside. But the main opportunity would be for anything negative. So if Governor Macklen signals any negativity and any reversal of the Bank of Canada's interest rate decision, then expect CAD downside. That's the best opportunity, because if you look at CAD over the course of the last few weeks, you'll see that a lot of the good news has already been priced in for the CAD. You can see here, if you just look on the daily chart, you can see the different currencies. You can see that, let's go since the last few weeks, you can see, look, since September, a lot of CAD strength has been priced in that pink line. So a lot of the good news is already priced in from the Bank of Canada. But if we got some very negative news, that would be the best opportunity, because you'd expect to see CAD weakness. Okay, that's opportunities for Tuesday. Wednesday, it's all about the CPI data. If we get high CPI inflation data, so anything above sort of 0.7, 0.8%, anything above sort of 0.7, 0.8 on the core, expect to see gold surge to the upside. The only slight risk is if inflation is too high, that could bring forward expectations that the central bank of the Federal Reserve will have to raise interest rates to control ballooning inflation. So the perfect scenario would be inflation running high, but not too high. And that should give downside in US 10-year yields, downside in the dollar, upside in gold. So something like gold would be really attractive on Wednesday. The Thursday meeting, look out November the 11th, expecting employment change data coming out for Australia. Again, what we're looking here for Australia is anything that's good. The last central bank meeting from the Reserve Bank of Australia, I've covered here in the central bank meeting. You can see the RBA was hawkish in deed, dovish in word. So they kept rates unchanged, but they finished their yield target of 0.10 basis points for April 2024. But they are basically saying we're worried about, wages. We want wages to be higher before we consider raising interest rates. And the broad outlook is sort of fairly negative for the Australian dollar from the Reserve Bank of Australia. And if you notice in the COP report, you can see here that Australian dollar are both heavily sold by speculators in the COP report and leveraged funds. So what that means for us in terms of tradable opportunity, if this comes in really strong and the data is really good, then look for some upside against something like the euro. So euro Australian dollar, for instance, if all of a sudden you see a really good data beat, then you'd expect to find euro Australian dollar downside. And let's just have a look for some of the key levels we might see. You'd expect to look potentially at downside falling back into support. Just look at the daily chart. Yeah, just looking for anything moving lower here would be ideal if we got some really good data. So watch out for that. Euro Australian dollar, a weakness on a very good data print from the Australian data. Okay, one to watch. May also see a bit of a retracement in Aussie New Zealand dollar, but I would prefer to trade it against a weaker currency like the euro right now. Governor board member Meichler speaking, worth looking at for the Swiss franc. If you just look at the euro Swiss franc, we do have a medium term upside bias in euro Swiss franc, but just notice how euro Swiss franc has been pretty pressured recently. That's the Swiss weakness, Swiss franc strength rather. You can see here the bond yield spread is moving higher between the German 10-year bond and the Swiss 10-year bond, where now the yield spread price tends to track this very closely. So the bond yield spread moving higher is good news for euro Swiss franc. A medium-term trade can be had at market with stops below 1.0471, looking ultimately up to 1.07, then up to 1.09 for longs. So if Meichler says, worried about Swiss franc strength, we'll be intervening in markets, etc., expect some euro Swiss franc upside. That's definitely a risk and one to be looking out for going into the governor's speech. Friday, just got some more speeches coming out. Got the FOMC member Williams. If you just go and have a look here, you can take a copy of this and you can see who the again, Williams is a dove, so you'd expect Williams to say something dovish. But obviously if you said anything hawkish, then you'd have an opposite reaction. That is the end of the week. Also, MPC member Haskell speaking. So, folks, that is the major lookout. Now, a couple of things to say. First of all, bond yields are moving lower. Expect that to keep moving lower. There wouldn't be a surprise to see a bit of a retracement. So we just have to keep an eye on the bond yields. This is all pushing back against early interest rate hikes. That's why the bond yields are moving lower. Equities are still supported to the upside. Now, the reason for the support upside is that, yes, tapering's begun, but there's still bond purchases being made, about 105 billion per month. Yes, the Fed's tapering, but it's not a surprise like it was in 2013. Yes, there's still fiscal policy supply from governments who are very keen to support workers, wages, companies, and earnings have been very good over the earnings season. So as a consequence, equity markets remain buy on dips. Don't sell into them just because they're at all-time highs. And if you do buy, look for clear places to define, limit risk, so you can buy at the best looking places rather than just any old place. With that being said, folks, that's the major week ahead. Don't forget, come back on Wednesday. I'll show us how to look at a different currency pair. We'll run through gold again. I'll run through yields and inflation expectations, and we'll start to get ready for that Australian employment data, and we'll maybe look at the Euro-Australian dollar, where it is at the time. I hope you have a very good rest of the day and enjoy the rest of the session. Yeah, Max says, could you do a webinar on the benefits of using HYCM, what it's like to trade via mobile if you have an app? Yeah, we do have a mobile trading, and basically just a tour of HYCM's trading platform. Yeah, okay, that would be, leave that with me, Max. I'll have to think about that and do a bit of prep to make sure I'm up to speed with that. A great point, by the way, Max. Thank you very much. I will look into that. Okay, folks, take care and have a very good rest of the session. Thank you now. Goodbye.